As of the market close on Friday, May 22, 2026, at 4 p.m. Eastern Time, Lucid Group Inc., trading under the ticker symbol LCID, settled at exactly $5.84 per share, marking a flat 0% change for the regular session, while ticking up a minuscule 0.02% in after-hours trading to sit at $5.84. This price action comes as a stark reality check for anyone watching the premium luxury electric vehicle market, especially when you look at how other prominent EV plays are moving. For context, while Lucid flatlined, Rivian Automotive edged up about 0.5% to $14.22, and the massive weight of Tesla stock surged nearly 2% to $426.01. That quiet, completely stationary day for Lucid hides an incredibly loud tug-of-war happening underneath the surface, especially because this flatline sits right on the edge of the company's recent 52-week low of $5.55, a far cry from its historic peaks. The biggest surprise that most casual retail investors are completely missing right now is that Lucid is no longer just a luxury car company trying to sell high-end sedans to wealthy individuals. The entire narrative shifted into a massive bet on autonomous ride-hailing infrastructure. Just weeks ago, a massive regulatory filing revealed that Uber Technologies has quietly accumulated an 11.5% ownership stake in Lucid, holding more than 37 million shares of Class A common stock. This wasn't just a simple open market purchase. It was part of an aggressively expanded partnership where Uber committed to purchasing at least 35,000 Lucid vehicles, including the newly launched Lucid Gravity SUV and upcoming midsize platforms explicitly for a global robotaxi service. When people look at an online investment today, they see a struggling car maker with massive quarterly net losses, but the institutional players looking for investment help or managing intelligent portfolio setups are starting to look at this as a pure moonshot play on autonomous fleet deployment. The general consensus across major investing sites is that Lucid is a cash-burning machine trapped in a brutal high-end EV demand slowdown. Retail traders looking at self-investing strategies through a standard individual brokerage or scrolling through the Robinhood app often see Lucid as a falling knife because of its persistent inability to scale manufacturing profitably. The expectation is that without endless cash infusions, the company faces existential risk. But the reality is far more nuanced because of who is backing them. Alongside Uber's massive commitment, Saudi Arabia's public investment fund just poured another $550 million into the company as part of a larger $1.05 billion capital raise. This unique backing creates a massive gap between public expectation and institutional reality. While regular investors tracking the stock on retail trading apps are worried about bankruptcy, short sellers are piling into the stock with a massive short interest sitting at nearly 49% of the entire float. They are betting heavily on execution failure, creating a highly explosive coil where any positive operational surprise could spark a violent short squeeze. If you look closely at the trading volume and daily swings following their first quarter earnings report on May 5th, you can see exactly why the bears remain so aggressive. Lucid reported first quarter revenue of $282.5 million, which actually missed Wall Street expectations of around $358 million. Even though their production numbers jumped significantly to 5,500 vehicles for the quarter, actual customer deliveries lagged behind at just 3,093 units. Management blamed this gap on a specific component supplier issue that temporarily choked shipments of the Gravity SUV back in February. Because of that hiccup, they chose to suspend their full-year production forecast, a move that sent shockwaves through retail investing sites and caused a sharp slide in the stock price. When a company pulls its guidance, the market naturally assumes the worst. Institutional desks using platforms like Interactive Brokers trading systems or managing heavy allocations in Fidelity mutual funds immediately started pricing in a prolonged production bottleneck. Yet despite that revenue miss, the cash position tells a completely different story. Thanks to the structured capital raises from both Uber and the Saudi PIF affiliate IR Third Investment Company, Lucid's post-raise liquidity sits at a very healthy $4.7 billion. This gives them a multi-year cash runway that most independent EV startups could only dream of. For individual investors using SoFi Invest or managing their retirement accounts through Fidelity Wealth Management, this creates a bizarre paradox. The company is losing massive amounts of cash on an operating basis, yet it has an almost bottomless credit life from a sovereign wealth fund that views Lucid as a core piece of its domestic economic diversification strategy. This capital structure completely changes how someone practicing online investing has to evaluate the risk profile of LCID compared to an entirely independent player like Rivian or a legacy automaker pivoting to electric options. Let us look at the operational foundation of this business model to understand how they got here. Founded back in 2007 as an advanced battery and powertrain supplier before pivoting to complete vehicles, Lucid built its entire identity on industry-leading engineering efficiency. Their flagship vehicle, the Lucid Air sedan, achieved an unparalleled EPA-rated range of over 500 miles on a single charge, beating out equivalent models from Tesla stock by a massive margin. They manufacture these vehicles at a purpose-built facility in Casa Grande, Arizona, which was designed from the ground up to scale up to hundreds of thousands of vehicles annually.
They also generate revenue by supplying their advanced powertrain technology to ultra-luxury legacy brands like Aston Martin. The core business model relies on maintaining a massive technology gap in battery management and electric motor power density, then leveraging that premium reputation to scale into high-volume consumer SUVs and commercial fleet sales. The recent executive leadership shakeup also signals a massive pivot from engineering exploration to hard operational execution. With Silvio Napoli taking over the chief executive role after a series of management transitions over the last year, the operational focus has visibly shifted towards clearing supply chain hurdles and honoring corporate fleet agreements. This leadership change is happening right as the LUCID Gravity SUV is gaining major critical acclaim, recently winning prestigious luxury vehicle awards for 2026. However, awards do not pay for massive capital expenses. The real test over the next 2 quarters is whether the factory can smooth out the delivery bottleneck that ruined the first quarter numbers. If deliveries begin to match production pace, the massive short position of nearly 50% of the float will find itself in an incredibly dangerous spot, especially if broader sector momentum shifts back towards electric mobility infrastructure. Looking forward, the trajectory for Lucid relies on a few critical catalysts and risks that will dictate whether the reality of this company can finally catch up to its original high-end expectations. The absolute biggest catalyst is the integration of their autonomy-ready platform into Uber's actual operating network. If Lucid can successfully deliver the initial batches of the 35,000 vehicle commitment without further supplier delays, it transforms the company from a niche luxury car brand into a primary hardware provider for global autonomous transport. This robotaxi optionality is the exact reason why sophisticated investors using advanced interactive brokers platform tools are staying attached to the stock despite the ugly net income figures on the balance sheet. Comment below how many shares of Lucid Group Inc. you currently hold in your portfolio right now, or if you are entirely avoiding the EV sector during this volatile macro cycle. On the flip side, the risks are heavily tied to equity dilution and macroeconomic pressures. Raising over $1 billion by issuing tens of millions of new shares as they did in April keeps the lights on, but actively deletes existing retail shareholders who bought in at higher levels through standard self-investing platforms. Furthermore, high interest rates continue to suppress consumer demand for vehicles priced well above $70,000, forcing Lucid to offer aggressive leasing options and financing incentives to move inventory. If the broader economy slows down further, even a massive fleet order from Uber won't completely insulate Lucid from the punishing costs of running a capital-intensive manufacturing business at suboptimal capacity utilization. The bear case is that the company will continually dilute shareholders to fund production until the sovereign wealth backing runs out of patience, though there is little sign of that happening given the scale of the Saudi investments. To wrap all of this up, the story of Lucid is a textbook study in the tension between market expectation and underlying operational reality. The retail market looks at the flat trading performance at $5.84, the pulled full-year guidance, and the quarterly revenue miss, expecting a slow walk towards irrelevance or constant rescue packages. But the structural reality reveals an entirely different entity emerging from the ashes of the premium luxury EV slowdown. With Uber holding an 11.5% stake and committing to 35,000 vehicles for a future global robotaxi fleet, and the Saudi Public Investment Fund anchoring the balance sheet with billions in fresh liquidity, Lucid is transitioning into a heavily protected infrastructure play on the future of autonomous mobility. It remains a high-risk, high-reward moonshot that is heavily shorted by the market, meaning that any sudden operational success in their Arizona facility could completely shift the dynamics for long-term investors tracking the stock. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.